Next is Krishnan, sorry. Krishnan, are you there? Krishnan Nair. Okay, he's not here. At this stage of market where small mid-cap stocks are valued, should we reduce position size or still take positions as per stock setup? This is a great question, and this is asked at the absolutely great time. In the course, your course FAF, especially in the market breadth chapter, and there is this environment analysis chapter, which maybe you've forgotten or some have forgotten. Not only you do stock analysis, you do environment analysis also. And for me, and I'll repeat it 2-3 times so that you completely absorb this. When you combine stocks with the right environment, you make easy money. When you combine stocks with the wrong environment, it becomes difficult because your hit rate takes a hit. Your success rate takes a hit. Like especially why are you making good money from March is because it coincided with market also taking a U-turn. So environment analysis can really make your job easy. Right now, let's do the environment analysis live. We just did a market breadth analysis. Where are we? Both the columns at extreme, 1400 stocks, 1400 stocks. And if you go and study the past, this is the extreme, very hot, overheated market. Then you check this index. You have complete change in the angle. This is a 55-degree, and it looks very similar to this kind of angle. And if you see especially the last 2 days, here you have a gap up and this kind of a doji. Here also you have a gap up and doji, and this doji is coming at the extreme, right at the top, after so many green days in a row. And the angle, in fact, is worse than the angle here. This is a 51-degree. This is a 55-degree. Worse angle, similar shape. What happened after that? We had a minor pullback. And if this was a stock, if this was, let's say, GMDC, would you buy GMDC here? Would you buy GMDC here? So now you have, let's study other indices also, not just this one. You have CNX 500, which broke out from a very decent size base. This is not very extended as the small cap. Small cap and mid cap are having a rally of like never before. This is, if you go study the previous rallies also, this looks very, very stretched. But overall, I'm not saying that everything is over. Overall, this is just like the Praj. If you see, just like the Praj stock, it has also given, the mid cap, small cap space has given a breakout of 1.5 years. But so the structure wise, we have had a great breakout. But timing wise, just like Praj, is it the time to buy? Yes, no. So I'm expecting maybe a smaller dip. And so the strategy could be, I'm definitely not putting money in this week. I'll probably wait out, and I'm also prepared for this kind of a dip. So to answer the question, am I putting fresh money? I will take a step back. What about the existing positions? Right? Now, if you clearly know that market is going to take a pause, then it makes sense to what you have, close it. Actually, it does not, because if you go and study these 2 weeks, these 2 days, when you let this happen, some will stop you out, I agree, but the ones which do not will offer you additional entry point. And plus, it will develop the main habit of not interfering. You cannot trade looking at the index, but you can change your approach looking at the index. Like, I'm not putting my fresh money. That's my approach. You can, instead of 20 DMA, the ones which are already very extended, you can trail them with 10 DMA. Or if they're super extended, like JBMA trade example in the class, you can trail them with 5 EMA. Sorry, 5 MA. But because the index is extended, I will close everything tomorrow morning looking at the market without even looking anything. That I will not suggest you, because then you will never find a 100-hour trade, because no stock goes to 100-hour without getting extended at some point. Like, I know many who sold GMDC here because it was up a lot, but they forgot that this is the start of the rally. This is not the extreme end of the rally. They sold it because they will buy it lower, and they never got the chance. Same with these guys are member. You can check with them. They sold IRFC here. Again, ignoring that this is the start of the rally. This is breaking out for a big base. This is not the extreme. and never got the chance to add it back. This is where IRFC is. It in fact offered additional points. Is this clear? Who asked this question? Oh, he's not. So that's how you do environment analysis. And for me, I'll repeat it 2 times. Environment analysis is very, very important. It is very important when you combine it with your stock setup, especially because we are buying with 2-3% stops. We're not buying with 20% stops. That even if market goes down, our stops will not get hit. If you buy a position in an extended market environment, in a bad environment, you would likely to get it. This is just like buying Praj, looking at the weekly frame that it has given a 2-year breakout, so I'll just buy it blindly. The same is right now the Nifty mid-cap index is saying that I'm extended. I'm not putting fresh money. At least I'll wait out for the next 3-4 days and I'll see. Without correction, nothing goes up. I in fact wanted to give some red days now so that now the experienced ones can write in the box and share their experience that this period offers great trades. This period offers good paper gains when your stock is higher. Yes or no? You invest money here and you reap those gains. I hope I'm clear. I answered your question. This is part 2 of the video. Today is 12th September, and this is where we ended the part 1, 8th September, how extended we were, and that led to the approach of not putting in fresh money and protecting your gains with the closer stop. 2 days later, today, this is where we are. We had a almost 4% fall in a single day. And when the index is down 4%, stocks go down usually 8 to 15%. A lot of stocks were down in double digits today. And thanks to this environment analysis, avoided this. Thank you.